Welcome back to another episode of Harmonious at Lunch, the show that fuels your business success. I'm Brandon Gano, your host and guide through the world of harmonious business growth. Today, we're unlocking powerful strategies with industry experts to help your business thrive. If you're a business owner, entrepreneur, or executive, you are in the right place. Join me and our incredible guests today on the journey to clarity, growth, and success. It is time to revolutionize your approach to business. Let's dive in with another episode of Harmonious at Lunch. Welcome back into some more bite-sized business advice, and we got one of everybody's favorite episodes today. We're talking about cash. Who doesn't love the topic of cash and cash flow, right? Unless maybe it's not flowing, it's bleeding. We'll get into that, I'm sure. But we're talking about 7 sources of cash. And I have no idea exactly what that means, but I think we're going to find out. I have an awesome guest lined up for us today, Jay Dotson. Before we go any further, Jay, welcome to the show. Thanks for being here.
Yeah, thanks for having me. Happy to be here.
So 7, I laid out the topic there, 7 sources of cash. What does that mean? Because anyone could hear that and say, no, there's like a million sources to get cash. But what do you mean when you say 7 sources of cash in your business?
Yeah, no, it's a great question. And so what we've found is, first off, I'll just say I'm a CFO, accounting and tax firm here in Austin, Texas. And what we do is we bring, holistic financial leadership while being engaging and fun. So with that, bringing the whole suite of services to our clients. We've worked with, CPAs and bookkeepers and all sorts of things in the past. But for me, what became challenging is that when I wasn't initially trained to be a CFO or what have you, and I was just trying to figure it out and really cut my teeth growing as a finance leader, I didn't know what I didn't know. And so I was looking for a CFO to really help me identify what was important in our business. And as initially an untrained finance person, it became really confusing to me when accounting executives or CPAs would explain accounting terms using other accounting terms, right? And then your head spins. We've all been there where we start getting in that conversation with our CPA. We're like, oh, there's taxes and there's, sales tax and there's this and there's that. And there's so many different terms that it all just makes it so confusing. And your quick ratio, and there's so many metrics. What should I be focusing on? And so we've distilled this down into there are 7 ways that you can impact cash in your business. And we're talking mostly about operational cash. We're going to leave out the ability to go raise funds or to get debt through a bank or otherwise. We're specifically focusing on what are the 7 sources of cash in your business. And in most every business, there are 7 ways that you can do that. So when we typically work with our clients or business owners, find that, man, I've got a cash issue or I've got a cash squeeze going on and I don't know where it's going, or I'm struggling to make payroll, this, that, and the other. The thought is they typically run to, well, I need more clients, right? And maybe, but there are really 7 ways that you can impact cash in your business. And so what we do with our clients is, first, let me go through the 7. So the 7 ways would be your price. You have control over your price. You have control over the quantity of clients that you serve. You have you can reduce your cost of sales or your cost of goods sold. You can reduce your overhead or your OPEX expenses. You can accelerate the speed at which you receive your payments, right? Your AR or accounts receivable. And you can put a solid plan in place for your accounts payable, right? Like we don't want to pay people, maybe not non-strategic vendors of ours, maybe day 2 of them giving an invoice when they've given us to day 30 or day 45, and we have payroll to meet in 7 days, right? Like that might not be the best plan for our money. And then making sure that we have the right inventory management system in place so that we can turn our inventory over quicker and we're not sitting on that inventory for too long to where all of our money is just sitting in there and we're liquidating it at the quickest way possible.
Yeah, so those 7 ways make complete sense, and of course you're in control of all of them, which you're kind of isolating all those things that business owners tend to worry about that are outside of their control. So basically, let's just refocus which one of those levers can we pull, how quickly and how much. I'm curious, when people come to you to first understand them, well, I'm sure they don't come to you fully understanding them or thinking about them.
Not.
So what does that process look like? Let's say I come to you in that very situation and I say, Jay, it's really a struggle to make payroll. Like, I don't know what's going on. What particular things are you going to ask me for? What are you going to look at in terms of my financial documents, bank accounts, whatever, so we can get to the root cause of that problem? Because, and the reason I asked that question is people come to us for the same thing, not so much cash flow, but they're like, I need more time. Like, I just don't, I'm always in my business, or maybe I do need more leads. And we're like, the problem might not be what you think it is. So
That's right.
your process to identify that problem?
Yeah, absolutely. So, first and foremost, the baseline of any of this is having solid financials. And so many six-figure, seven-figure business owners think of finance or bookkeeping as either an afterthought or something that is a necessary evil that they must do for compliance, for taxes, etc. And they're not using it for decision-making purposes to grow their business to the next level. And so what we do is first and foremost, we have to have the baseline of solid financials. And so what I recommend all business owners do is if the best use of your time is probably not in bookkeeping, right? If it is, or I should say, you can make a whole lot more money if you're not solely focused on that and you're doing uniquely what you can do to grow the business, which in a 6 to 7 figure business is likely off the skill sets of the owner, which is oftentimes marketing and sales, right? So we identify the baseline is what's going on in your financial statements. Can we validate it? Can we ensure that these are in fact correct, and we can use these to project out into the future to create the desired future outcome that you have, right? So that's the baseline, and we must first have that in order to then build upon how can we impact cash flow in any of these ways, knowing that the financials are correct. So with that, we've got a whole calculator for the 7 sources of cash that allows you to quantify what is the value of solving any number of these problems. Because the thought might be, I need to go get more clients, but it's exponentially more powerful for you to have to increase your prices so that, first you have to justify increasing them. You can't just be able to increase them willy-nilly. But to be able to justify that increase, it is exponentially more powerful for you to control your price over just going and get more clients, because you have a cost of delivering that client as well. So we've got this entire calculator that walks people through how to quantify what is the value of increasing your price by 1%. Does that 1% increase might lead to a 10% increase in profit margin? Well, that would be massive if you could do that, right? Whereas a 1% increase on your quantity or client volume might be a 3% increase or a 5% increase in profit margin. Does that make sense?
Absolutely. And real quick, I'll pause. I want to respond to that because it's such a valuable insight. You mentioned the calculator, which you had said you were going to give at the end of the episode, but since you talked about it, I tossed it on the screen here. If you're curious about it, it's also in the show notes down below, so you could check that out, 7sourcesofcash.com. So Jay, thank you for that. But
yeah, absolutely.
That's one of the things that I hear from people a lot. They say, I need more sales, I need more revenue, whatever that is, whatever the conversation is that they think they need.
Right.
And then we kind of go through from the operation side. On our side, we say, okay, if we were to, let's just say, double your business, you want to increase your business, you want twice as many leads, twice as many customers. If we did that, what does it look like? And we'll go through every area of your business. And we say, what does that look like on your bottom line, on your profitability? And then they come to realize, oh, that actually is going to put them further in debt because their operations are such a mess that they're losing money, or they're barely losing money now, maybe barely making money. But
Right.
as you increase volume, that actually increases and magnifies inefficiencies. And when that gets to the bottom line at a 50%, 100% increase in revenue, it actually turns into a loss. So right. that knowledge and understanding of being able to point out to people specifically, no, this area will get you the biggest impact.
Yep.
Is I'm sure valuable for a lot of people. Where does that cross the line between accountant, CPA, and CFO? Like, why are people not getting this information from their CPA?
Yeah, it's a great question. And I think that's the frustration that a lot of business owners have, right? They may have an outsourced bookkeeper, maybe a bookkeeper on staff, and they're, have a CPA that files their taxes for them. And oftentimes people have the perception of, well, my bookkeeper, my CPA's got this, or they go to them looking for that help and find that they're just not equipped to do it, or they don't have whether the skill set or the data available to them in order to do that. And it's just not the misconception about CPAs is that they are they're supposed to be doing that for their business, when a lot of times, and maybe some CPAs do that. However, the vast majority of CPAs, their goal is to file taxes, right? Their goal is to take what you did, take your data, make sure it makes sense, fits compliance, file the taxes, right? Whereas they might not be working on tax strategy as much, right? So, and that's the misconception, that they think my CPA just helps me save on taxes. Maybe some of them do, but what we found is that the vast majority of them don't. And even more of them don't help actually come in and help make the strategic decisions in terms of forecasting cash flows. And so when a business owner is met with the challenge of, I'm struggling to understand, how can I go and add a marketing director to my team, and what is that going to do to my cash flow? Well, the CPA and the bookkeeper are likely not equipped to do that. So that's where a fractional CFO can come in and be able to put together a model that forecasts all these sorts of what if scenarios for you. Let's take the same example, that if I bring on a marketing director to my team, what do I expect that to do to my revenue? And conversely, what is that going to do to my operating expenses, right? And being able to forecast that over time so that you feel really comfortable moving forward with that decision. And so I think that the fractional CFOs and finance leaders are uniquely equipped to be able to help in those manners.
So is it more about just understanding a CFO is really looking forward, and
Forward, yes.
a bookkeeper looking at really the past in most cases, right?
Exactly. Yeah, that's exactly right. And so it is their job to focus on the past, and to be able to make sure that everything is categorized right, and put in the right buckets, and all of that. But as far as the future looking aspects, all of your goals and dreams and aspirations, those things live in the future. And so that's where we spend all of our time working with business owners, so that we can help make their future become a reality for them, and set the plan in place for them to get there, as well as holding them accountable. So we provide that executive level leadership, decision making, and accountability along the way, to ensure that all parties are being held accountable to the goals that we've set forth, and so that we're able to make sure that comes to pass, and that you are able to realize some of those goals.
I love it. So CFO stands for Chief Future Officer. Is that what I'm hearing?
I
It's
love it.
absolutely terrible joke.
No, maybe we should coin it. Maybe that'll work.
People would probably like you a little bit more, because when they hear Chief Finance Officer, like, oh, that's the person that's going to tell me no to all my
Yeah.
fun dreams and hopes.
Hey, well, that's where we pride ourselves, and we've actually got it built into our. We're a big EOS firm. We've got it running in our organization. We love working with other businesses that run EOS too. But it is, so in that system, they force you to create, what are your three uniques in your business. And so for us, number one on that list is that we're engaging and fun, which is not typical terms that you would use in order to talk about your finance team or your CPA. Like, the joke is that we often make is, you typically want one team that you work with. You don't want to be speaking with 3-4 different CPAs. So that's where we bring the holistic financial leadership all in-house. And so our team takes care of it. But at the same time, and we are engaging and fun, and we love showing up with enthusiasm every single time we speak to our clients.
That's awesome. I love it. And I'm curious, out of the 7 sources of cash, do you tend to find, when you're working with people, at least for the first time, that there's one or two that tend to stick out as the biggest wins that they can get the fastest?
Yeah, I would say price is definitely the biggest lever that you can pull on, that has the biggest impact on your cash flow. And I understand that there are different business models that you have to handle it differently. As far as like a service-based business that might be on subscription, you have to handle it a little bit more with care versus more one-time purchases. You have a little bit more freedom to be able to do that. But with everything over the last 4 years, everybody's experiencing inflation, right? We're all feeling this at the grocery store. We're all feeling that as business owners. Employees are coming to you asking for raises because they also are feeling it at the grocery store. It all, makes sense. But oftentimes when we work with business owners, we ask, when's the last time you raised prices? And for some of them, it might have been 10 years. It's just always been this way. And it's a lever that people have a lot of fear around because there's a lot baked into, are people going to actually pay this? And I don't know if I can, if I've got clients that have been paying this for years, how are they going to feel whenever I raise prices? And so it becomes this challenging thing. And so we work with them to create a solid pricing strategy that isn't just sticking your finger up in the air and saying, let's try to figure out, maybe people pay this, maybe not. But really doing a competitive pricing analysis in order to come up with what might be the best pricing solution for you, as we see that as the biggest win for clients and creates the greatest impact to the bottom line.
I don't know if you know this, but the old lick your finger and what's the
Yep,
price today tool, that's the most commonly used in
it
small business
is.
owners and
I
entrepreneurs.
believe it. I believe it fully.
So yeah, please don't do that. That's awesome. That makes sense though. And it's one of those things where when you really think about it, like the easiest way to put it is if I raise my price 10% and everything else holds constant, I've basically just increased my profit 10%, which is
Massive.
obviously not the formula. I get that. I'm not that stupid. But even if you raise your price 10% and you lose a couple of clients, you will still be more profitable than you were before, and things will just flow smoother through your organization.
Right.
So,
Right.
yeah, that's a great tip. So, Jay, you have admitted that you have listened to this show before, which
I have.
I've now shared publicly, so people know that about you. But I thank you for being here. First of all, this has been great, and especially for small business owners, because this is a very touchy subject where I don't think a lot of people manage their finances in the future, and I wish more people did, because
Yeah.
that's going to have the biggest payoff. But you know what's coming, you know the question. We believe powerful questions get powerful answers, and in terms of managing your finances, we're really looking ahead and managing your future finances to grow your business, because that's what we're all about here. We want people to grow their businesses. What's the powerful question you want the listener to ask themselves in the context of today's conversation?
Yeah, that's great. I love it. And yeah, thanks for having me. I would say, what is the cost of inaction? Right? I mentioned before that business financials are an afterthought for so many business owners. And it is something that people just do for compliance, and you're not using it for strategic, business decisions. But one day, you might want to sell this business and you might want to have a big exit. Um, what is the cost of not getting this squared away? What are the opportunity costs that you are missing out on right now that you just don't feel comfortable taking the decision because this finance stuff feels really cloudy and it feels over your head and it feels like you don't have a good clear grasp on it, and you're not making decisions based on data. You're more so making decisions based off of gut. And there is so much freedom when you have a clear roadmap and you can understand what is the impact of bringing in that marketing director or any sort of other dream that you have before you and building a plan to get there. And so, yeah, I think that the cost of inaction a lot of times is very, very high. So I would leave your owners or your audience with that. I think it's a really helpful tool that I often ask myself is, what is the cost of inaction on this specific thing, and how can I ensure that this is going to create a great return for us in the future?
That's such a great question. Yeah, definitely ponder that for a few minutes and think about it. That's our whole goal at What If, is to help people build a fractional C-suite. There's so much knowledge out there in the world. And when you get to that next level of really forward thinking, strategic thinking, with a CFO, a CMO, and you can understand how all those pieces play together, your business is poised for massive growth in a very short period of time. So what's the cost of inaction, of not understanding your finances and not understanding how to get there in the future? I love it. This has been a fantastic episode. Wherever you're watching or listening, the link again for the cash flow calculator or the 7 sources of cash calculator is in the description. I hope you subscribe. We want to see you on the next episode of Harmonious at Lunch so we can continue to help you grow your business every single day of the week. We'll see you there.